Are you facing a mortgage default in Ontario? The moment you miss a payment, the bank starts a high-speed legal clock. In this video and Brandon's blog, Brandon Smith, Senior Vice President of IRA, Smith, Trustee and Receiver Inc., breaks down the exact steps of the Ontario power of sale process and how you can protect your home equity. In this video and blog, you will learn the difference between power of sale and foreclosure in Ontario, the 15-day rule, why your response time is critical, how a licensed insolvency trustee can help you stop the pressure, using a consumer proposal to fix your cash flow and save your home, and why starting now is the best strategy for GTA homeowners. I am Avatar Ira Smith. Right now, the real Ira and Brandon Smith are helping consumers and entrepreneurs just like you solve their debt problems. At Ira Smith Trustee and Receiver Inc., we are a family-owned licensed insolvency trustee firm serving Toronto, Vaughan, and the GTA. We don't just file paperwork. We provide a roadmap to financial recovery. We are not for everyone, but if we take you on as a client, we will treat you with the utmost of respect, and our guarantee is that you will never deal with a clerk or an assistant. You will always deal with a licensed insolvency trustee. Don't wait until the sheriff is at the door. Your first consultation with us is 100% free. I hope you can watch until the end of this video and that you find the information helpful.
You know, in millions of homes right now, all across Ontario, there's this quiet countdown happening. It's not something you can see on a calendar. Note, it's buried in the fine print of a mortgage. And look, this isn't just another story about interest rates. This is about the family home. It's about the fight to save it. Even Canada's top banking regulator is sounding the alarm. So the question really isn't if this storm is going to hit anymore, it's when. So let's just ask it, point blank. Is your home prepared for what's about to happen? All right, let's really dig into this because the scale of what we're talking about here is, well, it's staggering. By the end of 2027, a whopping 3.1 million Canadian mortgages are coming up for renewal. I mean, think about that. This isn't just a little ripple in the pond. This is a full-blown tidal wave building way out at sea. And just to put that number into perspective for you, that's over half. 52% of all outstanding mortgages in the whole country. So yeah, we are all connected to this somehow. It's either our home or maybe it's a family member's or your neighbor's. It's touching all of us. And here it is. This is where that storm finally makes landfall, right in your family's budget. We're talking about the average family looking at their mortgage renewal and seeing their monthly payments jump by over $1,000 a month. And you know, that's not just some number on a spreadsheet. That's the kind of money that can absolutely break a household. So this financial pressure cooker, it actually has a name, and it sets off a very specific chain of events. So let's break it down. Let's look at the anatomy of what happens when that pressure just gets to be too much. It all kicks off with something called a mortgage default. And look, a default isn't just about missing a payment, though that's the most common reason. It's actually a breach of your contract. It could even be something like not paying your property taxes or letting your home insurance expire. The very second that happens, you have legally handed the lender the power to take action. Now, the main thing triggering these defaults right now is something called payment shock. And it makes total sense when you think about it, right? So many families locked in these crazy low interest rates just a few years back, but now they're renewing into a totally different financial world. And that sudden, just brutal jump in their payment, that's the shock. That's what throws everything off balance. Okay, so once a default happens, a clock starts ticking, a very loud one. And you have to understand this. The bank isn't sitting on its hands. Oh no. They have a very specific, incredibly fast, and, well, aggressive playbook that they roll out to get their money back. So to really get what happens next, we talk to an expert, Brandon Smith. He lays it out pretty clearly. In Ontario, the lender's weapon of choice is called a power of sale. And he stressed that this is not a normal foreclosure. It's way faster. It is a rapid-fire liquidation of your single biggest asset. And when we say fast, we mean it. It's actually terrifying how fast. After just one missed payment, the lender can mail out a formal notice of legal action in just 15 days. That's it, 2 weeks. And from that point on, a forced sale and even eviction can happen with shocking speed. The whole system is literally built to be fast. But here's the real kick in the teeth. The power of sale isn't just about losing your house. The bank takes all of its costs. We're talking their legal fees, the appraisal costs, the realtor commissions, and they pass them all directly on to you. And how do they get paid? By scooping it right out of the hard-earned equity you've probably spent decades building. It's not just a loss. It's absolutely devastating. But this is not where this story has to end. It doesn't. When you're up against something this powerful, you need an equally powerful strategy to fight back. And guess what? There is a financial lifeline, a legal tool that can stop this entire process dead in its tracks and put you, back in control. Okay, let's be real. Your budget is probably already stretched so thin you can see through it. And now the bank wants even more. So how in the world are you supposed to find hundreds, maybe even a couple $1,000s a month to save your home? It sounds impossible, right? Well, it's not. The secret is a powerful, government-regulated process called a consumer proposal. And the strategy behind it is, well, it's kind of brilliant. You can't really renegotiate your mortgage. That's a secure debt. But what you can do, legally, is restructure and even get rid of your high-interest, unsecured debts. You know, things like credit cards and lines of credit. And this is where the math becomes your superpower. Just look at this example. So before the proposal, this family was paying $2,000 a month, $2,000 just on their credit cards and line of credit on top of their new mortgage payment. But after filing the proposal, poof, those debts are gone. They're replaced with one single, much smaller payment of $400. And just like that, bam, they've freed up $1,600 in cash flow every single month. That's the exact money they need to fix the problem with their mortgage. Now, obviously, this is a pretty complex legal path, and trying to figure it all out when you're under a mountain of stress, that's not something you should ever have to do alone. You need a guide, an expert, someone with a map who can lead you through the storm. And that's where Brandon Smith and his team at Ira Smith Trustee and Receiver Inc. come into the picture. As a licensed insolvency trustee, he is a professional regulated by the federal government. And his job, his entire job, is to represent your interests and get you to the safest harbor possible. Okay, so we know the threat. We've found the solution, so now it's time to flip the script. We're going to move from feeling scared to feeling empowered. It is time for an action plan. And look, the path forward is actually pretty clear, and it's totally manageable. Step 1, you talk to a professional for a free, completely confidential assessment. Step 2, you get your paperwork in order. You know, mortgage statements, bills, that kind of thing. And step 3, and this one is so important, you make the call to stop using credit cards to patch the holes. That just digs you deeper into the trap. And that's the real power of this plan. A consumer proposal legally eliminates those high-interest debts that are sucking your bank account dry. It instantly stops the collection calls. It freezes all the interest dead in its tracks. And the most important part, it gives you the actual cash, the actual breathing room you need to cure your mortgage arrears. It puts you back in control of your own future. So let's just end on this thought. You have to believe me when I say this. The bank has a very detailed, very efficient, and totally legal plan for your home. So the only question left, the only one that really matters, is what's yours. Please, don't just sit back and wait for their plan to unfold. It's time to create your own. Take that first step. Get some expert, confidential advice. Your home, your family's home, it's worth making the call.